Today I'm going to be talking to you about year-end accounting tasks and procedures to close your books. So if you have a business and at the end of the year you're wondering, what do I do to make sure my tax return is correct and to make sure I have an accurate picture of what happened during the year, this podcast is for you. So I'm Jessica with Facts, Figures, and Fallacies from the Front Line. And without further ado, I'm going to jump right into some tips for closing your business books for the year. First off, year-end, super hectic. All the holidays make everything very difficult to accomplish. So whether you're thinking about this at the end of December, at the beginning of January, it's super important to follow all these steps as close to the year end as possible. Otherwise, it drags out and you may not have time or resources to get all the information that you need. First of all, I said close your books. What does that even mean? Year-end closing, if you are a December 31 year end, which if you're a business, my guess is you are. You file at the end of that year, and that's when your report is, January through December. Your year-end closing is a way to get accurate financials or like a balance sheet, a profit and loss, an overall look at your business and how you did. And it also helps prepare you for tax information gathering. So your CPA is going to request, hey, what was your P&L for last year so I can file your tax return? And you're going to be like, what's a P&L? All these things will help you prepare so that tax season will be a breeze for you. I'm going to go through a list of things that you can just kind of check off one by one to make sure they're done. And if you don't understand my explanation of it, you might go to your local CPA and just ask them what you can do to help get these things accomplished. Number 1, review payroll-related information. Obviously, this is only if you are filing payroll reports and issuing payroll. One thing that you should do is make sure all your federal reports are filed, all your state reports, and also any withholding that happened through the year is correct. If you are set up on QuickBooks Online Payroll or anything like that, all this should have been done automatically. But if you are filing everything manually, you should make sure those reports got filed because you will get a letter later requiring you to file them with interest and penalties. And then some other things you should look at are deferred compensation. This is only if you're filing on an accrual basis. You want to make sure if part of your pay period falls in one year and part falls in the next, you want to make sure it's reported in the correct period. Next is employee information. Did your employee move? Are you going to make sure that their reports are going to go to the right place? Employee wages and deductions, just double checking to make sure everyone is getting paid what they should get paid. And if they got married, then their deductions would change. If they have a child, their deductions would change. So just getting that up to date. Raises and bonuses, if you are doing that at the end of the year, that's something you should check. Time off balances, so if you have PTO that you reset at the beginning of the year, you might check to make sure all those balances are as they should be and people weren't given too much or too little compared to your policy that you had them sign when they came on with you. And lastly, the balances of employee advances. So if you loaned employees money and they're paying it back by you withholding money from their paycheck, you want to make sure those are correct and actually the balance is going down and you're applying their payments to them, because that is really easy to lose track of. Number 2, complete the appropriate forms from employees and contractors. So at the end of the year, employees get what's called a W-2. So that just says, hey, for the whole year, you made this much money, this much was withheld, this much was dispersed. At the end of the year, employers are required to file those for each employee that they had throughout the year, no matter how much they paid them, and that report is due on January 31st. If you have an accounting software like QuickBooks Online where you have it set to auto reporting and filing, then that is going to get filed and mailed automatically for you. If you do not, again, this is something that you have to do manually and make sure it's done by January 31st. The next thing is to file 1099s for contractors. Throughout the year, you should have been paying, if you had someone work on AC for your business or, I don't know, do dirt work, whatever you may have done, or use contractors for in your business throughout the year, you need to give them a 1099, and those are also due January 31st, so get their information, their tax ID, which is either their EIN number or social, depending on if it's a business or them personally. So those 1099s are due January 31st. If you extend them, it goes into February. Number 3 is to take inventory. Now this is for businesses with a somewhat significant amount of inventory, and you'll have to talk about your CPA whether it's significant for you or not. But taking inventory means going through and getting a count of all your materials at the end of the year and adding up the cost of them. So at the end of the year, if my inventory is $100,000, it's not on my financials. I need to put that on my financials and balance it out through the cost of goods sold account. Again, if you don't know what that is, make sure you talk to your CPA to see if you need to take inventory or if that's something you don't do for your business. Number 4, scan in all business receipts. If you have a CPA who's keeping your books by, syncing your bank accounts and categorizing and all that, that's perfect. But you do have a responsibility to keep track of your own receipts. So scan them all in so that over time the ink doesn't wear off on the receipts, because you do have a responsibility to report receipts that are readable if you wanted to justify taking deductions throughout the year. Number 5, check your payables and receivables. Payables, these would be bills that were sent to you. So if you have an AT&T bill getting sent to you that you haven't paid, that's outstanding. You want to keep track of those throughout the year, and especially at year end, have a balance of all the bills you still owe. And then receivables, invoices you've been sending to customers, you want to get a tally of all of the receivables still owed to you. So that's important if you are filing on a tax-based or on an accrual basis for tax purposes specifically. But if you are not, then it's more of a record-keeping thing for you to make sure you're going into the new year clean. Number 6 is to record interest on notes payable. So this is super important. If you have like a car loan, a small business loan, any loan related to the business that you're paying, the interest on those loans is deductible. So you want to ask your bank or whoever you have the loan through to provide the information for that year. So ask them what the balance is, and then ask them what interest was paid that year so that you can give it to your accountant and they can put it on your tax return for you. Number 7 is a fixed asset listing. Most people do report a fixed asset listing, but you're not required to in some cases. However, if you have purchases or disposals that year, you need to report them to your accountant. Purchases, if you bought a new truck for the business, send your accountant how much you paid for it and the date you paid for it so that they can know how much to depreciate or expense that year. And disposals, that's either you had to junk an asset because it's just worthless now, or you sold it. So your accountant would need to know how much you sold it for, if you didn't sell it for anything, and when that happened. So make sure you're keeping track of that. And number 8 is to get your what we call fiscal records in order. That is you reconciling your bank accounts and credit cards. So if on this Excel or wherever you're keeping track of this, if it says you have $8,000 in the bank account at the end of all of this, then you need to go back to your bank account and make sure that says the same number. And if it doesn't, you need to know why. So same with credit cards. If you owed $500 on your credit card at the end of the year, all of your accounting throughout the year should match that credit card balance. And number 9 is just for you, really, identify a plan for the new year. So now that you've gone through all this trouble of figuring out how much you made, just look at those numbers and see, okay, do I need to cut costs here? Do I need to add here? Do I need to charge more? Whatever it may be, you need to see what's working for you and what's not working for you and how you should move forward. That's another great reason to do this in January or at the end of December so that you are getting the most out of this data. If you choose to do it after your deadline's been extended, October, September, then at that point you're pretty much done with the next year and that information won't serve you near as much purpose. So the conclusion to this is this can be overwhelming, but I just wanted to bring these items to your attention. If you are trying to do this on your own or at least get a handle on understanding your business, even if you do have a CPA. So if you are overwhelmed, you can ask someone to guide you through it. We can help you. Your CPA can help you. But good luck going forward and Merry Christmas. Thank you.